Today, in our Spotlight series, we're focusing on how analytics and technology are simplifying access to alternative investments. And I've invited iCapital Head of Private Asset Research, Kunal Shah, and iCapital Head of Architect Business Development, Anthony Palemis, to weigh in on that topic. Gentlemen, thanks so much, Kunal and Anthony, for joining me today.
Thanks for having us.
So Kunal, let's start with you. When you speak to financial advisors about portfolio construction and about including alternatives into the portfolio, what do you hear? What's the feedback? What are the challenges?
You have done this the same as I've done as well. When you go and talk to financial advisors, they're so new to the alternative investment asset class, right? There's a lot of demand because this is one of the few places where you actually can get the enhanced return, better optimized portfolios. But the lack of education and awareness in terms of understanding that and figuring out how to fit that in your portfolio. And so that's the journey that we have embarked ourselves on. How do we help advisors bridge the gap, both from a knowledge perspective, but also product fit perspective? That includes a couple of things. One is understanding how the asset allocation within alternatives work. Once you decide that you want to allocate X% of capital to alternatives, you still need to figure out how much of that goes to private equity, private credit, real assets.
Sure.
And so trying to help them bridge that gap. Second is help them determine products. If you rewind 10 years ago, the number of products available to financial advisors were few. Today, there are 10 times as many funds out there that are available to financial advisors, and their heads are spinning. They're like, which one of this is the right product? The growth in the registered fund space, also evergreen products that we call it, whether it's non-traded BDCs, REITs, 40X fund, interval funds, that has just a tremendous growth momentum for the industry.
Sure.
But advisors really need a playbook that is simple. And so our job, as we think about what we can do for advisors, is simplify the entire process around thinking about allocations from an annual perspective, identify products, and then talk to them in their playbook. They are coming from traditional asset classes. They're used to mutual funds, ETFs, 60-40 model portfolios. We got to create something that is very similar to them, especially for the newer advisors to the alternative asset class or smaller financial advisors who don't have the resources to do all the work themselves.
Right. But Anthony, from your perspective, from the technology side, what are the challenges? What is it that advisors need to make that allocation to alternatives within portfolios?
Yeah, so just as Kunal mentioned, in public markets, models have been really popular for advisors. Similarly, in public markets, advisors have had access to portfolio construction tools for a long time, but there are a lot of challenges as it relates to incorporating now privates into those portfolios. There's a huge selection of private funds that are available to advisors. So being able to actually analyze those funds on a fund-by-fund basis and not just using proxies is hugely important, actually getting down to that manager level, that strategy level, rather than just zooming out. So that's number one. Number two, you want to now incorporate these private funds into broader kind of public market portfolios. It's not just evaluating what fund or funds do I want to buy, but also where do I actually fund those purchases from? How do I draw down from my public portfolio to allocate to private? The third challenge is ultimately this is all about the client. And so as an advisor, I need to think about how does a private markets allocation help my client reach their financial goals, and how does it respect their constraints? And so when we think about analytics, it's not just about risk and return. There's a lot of other considerations, including liquidity, for example. And so constructing that outcome-oriented client portfolio is really important. And so what we've done with Architect is really we've attacked each of those challenges from first principles, and we've delivered a portfolio construction tool that really enables advisors to evaluate funds from their iCapital menu, bring them into portfolios and evaluate them on an apples-to-apples basis with the rest of their public markets exposure, and then ultimately layer in their clients' goals and preferences to determine portfolio alignment. And we're really excited about what that can bring to the portfolio construction.
Well, that is a very important journey, to go from the traditional 60-40 portfolio to actually envision and sort of touch and feel for what that would look like if you incorporated specific alternatives within the portfolio. And Kunal, to come back to you and talk more about model portfolios, and tell us a little bit more about how are those models created and how do you construct them, and what tools are you leveraging to develop that?
Yeah. One of the focus area for us is outcome-oriented portfolios. So the most basic outcomes that we all use in public markets, we are applying the same to private markets and alternative investments, which is income, growth, and what we call growth and income or balanced. We launched our first portfolio, IMAP, which is a balanced portfolio. And the intention is to leverage the research library. So iCapital Private Markets and hedge fund research team covers over 80 private markets funds in evergreen structure. These are essentially funds that are available to accredited investors. Second, we wanted to apply statistical framework to that. So leverage the data around historical performance, compare that performance to public markets, distill the performance between alpha and beta components, right? And then do a forward-looking assumption, assuming that the spread of alpha that these managers have delivered in the past will remain. There, we will focus on the highest conviction names out of the 80 plus funds. So we won't include every single fund in the mix, right? The forward-looking assumption then is a framework that we will use to simulate the performance in the future markets, where we use some of the capabilities of Architect. Architect has a lot of sort of quant scientists behind, and our team connects with that team to figure out what is the future-looking sort of projection of those performances and develop the right framework. And then what we try to achieve for our clients is to develop a portfolio that not only gives you asset allocation within alternative investments, so X% goes to real estate, X% goes to private equity, but also find funds that match up with those allocation buckets. Further, we are leveraging technology tools to make the investment experience simple. And then lastly, let's not forget Architect. We are leveraging all of this so that clients can view this in Architect and run all kinds of analytics as well.
Well, what you're highlighting is really the tremendous amount of work that really goes into making that ultimate decision to allocate to specific managers within your alternatives portfolio. And there's a whole lot of dispersion amidst manager performance. And so the fact that you're selecting the managers to potentially improve that model portfolio experience, that's really critical. Anthony, to circle back to you, and let's talk about the integration with within Architect of these model portfolios. How can advisors access those models within Architect, and why is that important?
Yeah, I think the combination of the model portfolios and Architect is really powerful for advisors, because as an advisor, you can harness that intellectual capital, that rigor that went into the construction of these model portfolios, and now bring those allocations into your client's portfolio. And so you could simulate perhaps a 10, 20, 30% pro rata allocation of these private asset models into your client's public portfolio, and then really evaluate what the changes are and ultimately have a much more informed conversation with your end client.
So the point of the discussion is how can we make it easier and how can we make it more streamlined? And I really appreciate this combination of Architect with model portfolios in really helping advisors streamline that asset allocation process to alternatives. So thank you very much to both of you, Anthony and Kunal, for your tremendous work, and thanks for joining us today.
Thank you.
Thank you.
Thank you. And we want to hear from you. Send us an email at yourquestion@iCapitalNetwork.com and let us know what questions are at the forefront for you and your clients. I'm Anastasia Moroso, and thank you for joining us today. I'll see you next time on Beyond 60/40.